We are going to start in just a minute. I'm going to give it till the top of the hour, 9 o'clock. This is a new format and I'm kind of experimenting with it. So, by all means, give us some feedback either here or to JVC or in the pit. The idea is real simple. There's two parts. I'm going to do this every Friday at this time. And then I also still am going to do the closing setup, obviously. But two parts to this one. It will be relatively short, half an hour, maybe, sometimes we'll go a little longer, but the idea is just a quick recap of the week, not in a lot of detail, just kind of an overview, thinking about, what just happened. And then a little bit of, just experiential wisdom from something, a topic. And as I've mentioned a couple times this week in other sessions, the topic today is about understanding that you have to adapt to market change. And that is probably the hardest thing to do as a trader. I've been around a while, and that is one that it's hard to teach. It's hard to even understand when you're doing it well, why you did it well. It's a tricky one. So that's what I'm going to talk about today. By far, in my estimate, I spent most of last month thinking about this. I wanted to have a good topic for the first session of this idea, and by far, the hardest thing I've had to learn as a trader is how to see a change in conditions. Because when I'm getting it right, when you're in the zone, and your trades are working, it's real easy. Oh, I see what's going on and I'm trading it and I'm making money and everything's working, right? But when it stops working, sometimes it's your execution. Sometimes it's change in conditions. Sometimes it's just statistics. If you have an 8 out of 10 edge, 2 out of 10 isn't going to work, So understanding which of those things it is really, really important, because if there's truly a change in conditions and you miss it, that's what causes people who are consistent with one strategy over time to blow their accounts up or start losing a lot of money because they're trying to use a strategy that's not appropriate for the current conditions. And what they don't realize is, guess what? The conditions changed. And that's going on right now. We had basically for a decade, we had a trending up market. So, everybody and his brother had enter on pullbacks from the trend indicators and buy the dip. Guess what? That's over. It's been over for 2 years now, at least. And we've been in a giant range. And so if you don't understand how to trade ranges and when ranges break and when they don't and what the artifacts are you want to look for, you're screwed. You're going to have massive losses trying to use your old trending strategy. So that's kind of the nuts and bolts of what we're trying to do. And hopefully we'll do it. So that's the plan. We'll get started in just a moment, and stick any comments you have in the chat. I don't know if it makes any sense to share my screen for this. I mean, I'm watching the market trade. Is there any value in having that going in the background?
I was thinking probably not, unless you're going to specifically reference something as a visual example, but otherwise,
Yeah, I'm thinking the same thing. Something might happen that I can say, oh, wow, let's show that. That could absolutely happen. But, probably, well, you know what? A good example, I may want to, when I'm recapping the week, I want to show a chart. So yeah, all right. Yeah. I'll bring it up as needed, as appropriate. So, all right, what time is it now? We are just at the top of the hour. Okay, let's get started. So let's do that. I'm going to real quick drag over onto my main screen and share it. A look at the TPO view, which, just kind of as a zoom out, I break up the TPOs into overnights and regular sessions. So regular trading hours today, last night, so basically, here's most of the week. I can crunch it a little bit more. There we go. So, we've been working a giant range all week and for a couple of months actually, but this week, the range has been really well defined. There's really clear spots like that 3,800 double weak poor low down there where, if that goes, everybody's going to jump on that. And today was wild at NFP. We got close to down there. We got to God, am I remembering? It was like 03. Does anybody remember how low? I think it was 03. Anyway, so yeah, but we didn't break it. And so, and then there's artifacts above us. We got a little bit of a, you could kind of call this a short squeeze relief rally going on, I think, right now. I posted this in the pit. And this is the other thing I kind of want to just look at real quickly. Let me zoom this out just a bit. And this is going to be part of the theme I'm going to talk about with changing conditions, how I've learned to adapt to that. And so what I just did here, I just switched this to 600 seconds. In other words, 10 minutes. I like to think in seconds. The blue boundaries are the initial balances for the last couple of days, and this is today over here. And when we got that crazy move at NFP, and let's see, how low did that go? Nah, it didn't quite go as low as I thought it did. Anyway, when we got that crazy move this morning, I was watching it in terms of the initial bounce from yesterday, and all it did was kind of test the low. We had been kind of doing that all night. And then once we broke above that, that's kind of where the trend day started today. You see what I mean? This is kind of the extremes. This would be the extremes of yesterday, and this is the extremes of today. And these are standard deviations of the VWAP. And right now we're kind of riding SD2 up. And that's basically a trend. But it wasn't going. We had a pretty serious correction in that trend. So you could really say it kind of started right here when it took that high out, took out the initial bounce high. Many of us were trading that, and basically we're just pushing extremes of yesterday. So that's the way that I like to look at context. And so looking at this week, back on the TPO for a second, we're right back up here, and I don't think you can conclude a lot from that yet. We've gotten past FOMC minutes, we've got past NFP. So, now that we had a lot of price discovery after the numbers came out and at the open this morning, and actually we're still getting some. And so, the debate's going on, the auction's going on. I would not have an opinion. So that is kind of my, I'm gonna stop the share here. That's kind of my take on the week so far. I think it's been a really good first week of the year and of the month. It didn't start out great. Monday was weak, but so far, a little bit of energy to the upside. And I think no matter what, this is what I was posting in the pit when I was talking about the range. No matter what happens, we've got really, really good setups here. No matter whether you're trying to play long or short or both. I played both all day, and it really played out nicely. So, some weeks there will be more to recap. Other weeks there will be less. And right now, I think that pretty much sums it up. I think this is a really good trading environment. I wouldn't want to be somebody that's, running a long only fund right now. I wouldn't want to be that guy's bonus plan, because I don't know that we have that much upside, but we certainly could go a couple hundred points in either direction. And there's lots of, and that sets up a lot of good plays. I was telling the people that were at NFP this morning that, if we challenge that double 4-week low down there around 3,800, I would be all over that long until it proves me wrong. But, let it blow through there by 10, 20 points. And then, the minute I saw buying, I would have jumped in really aggressively. And, if you're wrong really quickly. And those kinds of asymmetric setups, we've had a lot of them. I mean, look at the my 5-second view that I run the LRCs on. So here was the NFP number over here, okay? And that was just craziness, right? And then, we had some really good trading. After it pulled back, it put in a nice little bottom there. You could have got long. That was a great trade. Then it put in these great shorts a couple of times. Each time it broke a ledge, it pulled back really predictably. Here was a ledge break, and that was a really nice pullback. And so those were fadeable. I swarmed all those both ways, long and short. And now, we're kind of trying to decide what we want to do when we grow up here. We're holding right at 3,900, and most of the value is up here. Most of the volume's up here. I wouldn't quite call it a long or a short distribution yet, but if we continue to fill this volume in and make, a P up here, then, that's pretty much what you could conclude. So here's what the volume looks like. Again, if you're new to my footprints, this is the Globex, and then this is since we opened regular trading. And basically, we had that big push down on NFP reaction, and then we put in a lot of volume in the exact same spot, right around the low 60s. That was a really great spot to get long. And then we rallied up to the 90s, and there was back and forth, and then we blew up here. So again, a really rich environment for all kinds of setups. No matter what you're doing, they're here. And now we have UB again, and we have.
Did you think you were sharing, by the way?
Oh, shoot. Well, yeah, I did.
Yeah, you transitioned from not.
Yeah, I jumped into it and I forgot I wasn't. Well, here, let me just put that up so you can see what I was talking about. Sorry about that. Yeah, right here.
I was looking on my screen.
yeah, you could have done that. Anyway, this is what I was talking about. And it just was a really, really tradable set of circumstances. Here's the what I was talking about with the pullbacks. This here was NFP, and then we had really good pullbacks to fade. And then this was the ledge break right there. And great pullback, and then another ledge break, and then a great pullback, and then another ledge break. And then, now we've gone into this kind of, what do we want to do when we grow up, right at 3,900, big fat whole number. I have no opinion up here. But what I was saying, if you look at the volume, it's trying to make a P up here, and that would indicate that most of the shorts are liquidated, right? So, they'll market profile theory. And we have UB up here still, and we have a price rejector on the pullback on 30. I've got the session running on my other monitor. Actually, you know what? Real quickly, let me just show that, because that is nice and informative, and it doesn't, well, that'll script the recording if I change to that again, JVC?
Yeah, it messes with the resolution. If you can drag something over, it's much better.
It's too big to drag over. My session goes vertically, so I'll just skip it. Take a look at a session profile if you have a chance. There's a price rejector at the low, and we have UB at the high. And so, buying the pullbacks has made sense, as I said, the once we broke the ledges, the return back into the range was great too. So this is a really rich trading environment. I'm having a blast. So, all right, now I'm going to turn my share off, and I'm going to leave the weekly recap part there. Thank you guys. I see you in the chat telling me that too. That was the stuff we missed. So we're caught up now. Anyway, so that's the weekly recaps kind of stuff. I'm going to kind of, 10, 15 minutes. And this week was pretty simple. I think the story is pretty clear what's going on. So let's switch to the other thing. And this is kind of the old farts, stories and things that I've learned. And I've got a lot of good anecdotes. Trading for 50 years, you can't not have a lot of good stories to tell. And again, as I was saying at the beginning of this session, I sat down trying to figure out, what did I want to do for this first one of these? I'm kind of trying to make it like a fireside chat. Here's stuff I've learned that maybe, you can learn easier than me or not learn the hard way. And absolutely the thing that just kept coming up when I thought about that was transition in conditions. Look how many people, that have been buying the dip for a decade. Maybe that's the only way they know how to trade. A lot of, if you're 30 something, you might have never seen anything but a bull market, and that's crazy. But if you don't recognize when conditions change, you're just asking to get, completely run over. And so I was thinking a lot about that, and I looked back on some of my history in trading, and absolutely the worst months and years I have are when there's a very dramatic change in conditions, and it requires kind of re-understanding what my tactics and strategies are going to be. So, for example, there was the buy the dip stuff has been really strong for the last, couple of years, right? 10 and some, depending on if you skip a few, it's more than that. But like Lee was saying in our session yesterday, when Trump first started tweeting about companies and about Boeing and whatnot, remember all that crazy volatility we were getting? And every single buy the dip there worked. But you also could have played them short, obviously. So now that's no longer the case. Now we're getting a lot of volatility, and it really is not within a trend. It's this giant range. And so if you think about a giant range, it basically is a statistical way of making as many people wrong as possible is a big giant range, because anybody trading a trend is going to continually be off sides at the absolute worst part when they're scaling up. That's what happens when you get those kind of directional reversals. And if you're a good range trader, this is golden. You can clean up. It's a golden goose. You can literally just let it lay eggs for you. So one of the things that looking back on the times I got it right, when I was able to understand the conditions changing, and the times I got it wrong, I kind of thought, what did I do differently? And that's a good way to understand your attack of a problem and how far along you are in mastering that problem, right? So I keep thinking of this little thing I've mentioned in a lot of the boot camps and in the workshop: adapt, improvise, and overcome. It's from a movie about the Marines with Clint Eastwood, and it's kind of a pseudo military slogan for some forces. And the idea is just, no matter what your plans are, the best plans never survive first contact with the enemy or the opening of the market. It always will change up. So you have to immediately understand that you need to adapt. And in order to do that, you have to often improvise. And so what does improvising mean in the market? Well, for me, what I just showed you is a really good piece of it. The first thing I do is I zoom out. But, when we just talked about the week, we were just looking at the week and maybe a little context around that. I'm going to share one more time here because this will be useful to share. But if you really want to kind of understand the big picture, you've got to go further out. And I never trade off a 1 year view, but here's a 1 year view, daily. And just to understand the risk of being long right now, you have to look at the recent low. And guess what? It's 300 points down. And we were talking about this during the NFP session today. Not only is it 300 points down, but that's almost exactly where limit down is. Surprise, surprise. So, if the number had really spooked the market, we could have easily fallen. So you have to look at recent boundaries like that to understand what is and is not even within the realm of possibility. And this is not a market that has direction. It's got really sharp, radical moves. And so there's just no way to say, I need to be short because it's trend down, or I need to be long. It was trend down up until recently, and now we've been in this giant range. So absolutely, positively, you have to have some way of zooming out. And sometimes a year isn't even enough. Sometimes, I'll zoom back 2 or 3. But, at that point, it sometimes can be distracting. You look for patterns that aren't really there. So step one for me is always that, just take a zoom out and say, okay, and this is the way one of my mentors explained it to me. And I really like this. So I'll share it with you guys. He said to me, zoom out like that, and then imagine you've got a 3 or 4 year old sitting on your lap and you're explaining to them what that is. Explain to them what the market is and what a trend is and whether or not there is one here. And, that's a really good way to think about it. Put it in language that, a baby, 3-year-old, 4-year-old could understand. And so looking at that view we just had, this is a range bound market. And so once you kind of have an understanding, then, you have to try not to be biased. Could this range-bound market become a trending market? Yeah, absolutely it could. Down is certainly possible with all the bearness, and we could certainly get a crazy rally. Hell, we could rally to new highs again if, there was a combination of factors that got the market's juices flowing. So the second part is really important. First, you have to zoom out and get perspective. So that's the way I look at that. Zoom out and get perspective. And then part 2 is question your assumptions. If like I do, I'm looking at that and I'm saying, okay, there's a beautiful range there, but when is it no longer a range? It's, it's like Batman. When is a range not a range? Well, when it breaks it, that doesn't mean the range is going to go away. It might just break it, overshoot it by a bit, and come right back in. We've seen that a few times, haven't we? And go back to that view that I was showing you on the TPO view. We've broken out of the range a whole bunch of times, and then, for whatever reason, usually some sort of economic news or Powell talking or whatever, and then we go right back in and fill it in. It doesn't always do it the same day. It might not do it the same week, but it does it fairly quickly. So that's my 2 kind of, if I boil down all of the cases where I made a good decision in conditions changing, or I didn't, what did I look at, and what was I looking for? And the first thing is zoom out, get perspective, stand back as far as you can that makes sense, and then look at what you're seeing and try to explain it to a 3-year-old. What is this? What are we seeing? When it's a trending market, if you zoom out a year, you'll see a really strong trend. Trending market over a year will definitely continue a trend. So, and then as soon as you've done that, question your assumptions. That's the process. And if I look back, every single time I did that, I might not have gotten what was going to happen next right. But what I didn't do was I didn't make a really serious mistake at what turned out to be a transition to newer conditions. And this one's really important for a lot of us, this question your assumptions piece. And the reason that it's really important is because in order to be a good trader, you have to be pretty strong-minded. And that's a strength, but it's also a weakness as a trader. If you're really stubborn, that can be really dangerous. But you also have to have your convictions that, what you think is right. Otherwise, you'd never be able to execute a trade. You never have the confidence, right? So that's a bit of a dilemma. And I think it's really healthy. And so what I started doing, this is the takeaway at the end of this whole story here. What I started doing, and this was about 20 years ago, every Sunday, I used to really prepare. I used to look at support and resistance levels and all sorts of indicators on a big giant whiteboard in my office. Don't do that anymore. That's not necessary. With order flow, we don't need to look at all that garbage. But what is important, every Sunday morning, I do this. I kind of look at the previous week and I say, okay, are conditions changing? Is what I've been doing going to work next week? What worked last week? Will that work this week? And under what events this week might impact that? Like NFP or FOMC minutes. And I have a little card. You guys have seen before. I have these 3x5 cards in a rack on my desk. Every single week or day that there's a situation where the conditions could change, one of the cards I put up is today an outlier? Is what it's a question. That I'm questioning my assumptions. Is today an outlier? Just because we broke the top of the range, does that mean the conditions have changed, or was this just, a reaction to NFP? Well, I'll tell you what, today we won't know the answer to that. We'll know the answer to that next week about today. And it's the same thing with FOMC. Anthony Credelli likes to say there's FOMC is 3 days. I love this. And he's totally right. It's the day of the announcement. It's the day after, which is the reaction to the announcement. And then the third day is when the market finally values whatever it is that the announcement was. And that's really true. And you have to think that way. So zoom out and question your assumptions. And don't do it too frequently or it gets really tedious, but once a week is a really good rhythm, I think. Certainly once a month, it's really important. But depending, this market's volatile, so I think once a week that'll keep you on your toes. So that's kind of my story. That's my quick kind of weekly recap and my first kind of tips from the tar pit. We should call this JVC tips from the tar pits. Too funny. That just occurred to me now. Sometimes I crack myself up. Anyway, some of the other topics I plan on talking about going forward. And what I think I might do, in fact, again, JVC, since you run the pit, maybe we could start a stream with suggestions, and I'll also post the topics there for the upcoming week. And there's a bunch of really good ones. I've done this before. About 20 years ago, I had a trading group, and I used to do this every Sunday, the same kind of thing, a fireside chat thing. And we had so many good topics. Like 1 week when I was trading in front of that particular group, I lost like $5,000 in 1 day and just really got run over. And so the topic that weekend was, how do you mentally survive a loss? That's pretty significant. How do you move on? What do you do? How do you clear your head? How do you scale back in? And that hopefully my doing that will prevent you from having that thing to recover from. But every trader goes through that sooner or later. So it's nice to know that there's other people that have had that happen and how they dealt with it. And trading is a really hard individual thing. And if you don't have a community and don't have any reference points, it's really easy to go crazy. I promise you, I've been there. I've sat trading, in one place or another in the country or around the world and, really got focused in on it. And you start to get stir crazy. You really do. And so it's important to have a framework. And that's what I'm going to hopefully keep giving you once a week on these. So let's see. I see a couple of comments. How do you see a change in condition during the day? This is a really good question. And you know what? I'm going to answer that in detail because that's such a good question as a follow-up to this. What I'm talking about is, the conditions overall, the overall, swing conditions of the market. But intraday, things can change so fast. And that is such a good question. So continuing to read it, let's say the open 5 is ranging no direction, and then suddenly it starts trending and ranging for the rest of the day. Okay, how do you change your mind? That is really a good question, Bar. And for me, I solved that 2 ways. The first way I ever solved that when I was new was I broke the day into predefined segments. So, like the open 5 and the initial balance, and I would walk away after each segment and totally clear my head. Whatever I thought was happening, I'd say, okay, I'm starting over. So let's say we have a gap up. And, the open 5 is a gap up and it's real strong in one direction, and then I'll take a break after 15, 20 minutes and then come back and look at the initial balance. And, it looks like we have an opening drive. Every time I think that, I'm either right or wrong. And I got to tell you, it's about 50% of the time at that point in the day when I think, okay, this is really strong opening drive up or opening drive down. It could go either way, gap down and then continuing. And every single time I've done that, I keep track of this. This is one of the things I keep statistics on. I'll say, okay, is this an opening drive or not? Yeah, I think this is one. and I'll be wrong. And then I'll say, no, this isn't, it's going to flip, which is kind of the opposite of an opening drive, right? It's going to flip over and turn, and no, it'll be an opening drive. So what I learned, and what works for me on that, is to really break the day up and drop the preconceived notion. So open 5, and then see the A period, and then see the initial balance, and whatever I think has happened up to that point, I will walk away, come back, and I did that this morning. So here, let me share again. This will be a really good example of this. Back on my main screen. So this was today right here on 600 seconds. Let's make that a little faster. Let's go down to like 5 minutes, 300 seconds. Okay. Because we had that exact thing happen. We had that NFP, the market traded down, then it traded up, then it traded down. This is the NFP number here, and then it traded right back up there, and then it went all the way back almost to the low, and then by this time we were open, and then it went all the way up here, and it looks like we have a trend day going, except we're running out of gas up here again, and that's exactly it. So what I do, I divide the overnight. The overnight has its own segments, but once we're open, so there's the pre-open, the overnight, the pre-open, and then once we open, the open 5 is that first momentum, and then the initial balance is my second kind of snapshot, and I'll take a look at the end of A period, but I try not to have an opinion until I've seen the whole initial balance. And then at that stage, as soon as I've seen it established, so 7:30 my time, that would have been right there. I get up and I walk away. I go somewhere else. I go for a walk outside. I walk my hill. You guys have seen the little reminders that pop up. And then I come back and I say, okay, if I just walked up to this and I have to explain this to a 3-year-old, what is it? Okay, we opened weak, it got bought, and now we have a trend day up. That's how I would interpret that. But I wouldn't have interpreted that if I'd been staring at this, because this was such a strong down and we had so much volatility. So it helps to clear your head and segment the day. I know, the market profile is just a more, granular version of that, every half an hour segment. I found that to be really hard to stay dialed into for a whole day. So what I do is, like I said, pre-open, overnight, pre-open, the open 5, the initial balance, and then from that point forward until the close is the rookie roast. So I never have any assumptions of the day after it breaks the initial balance or it doesn't. If we get to like 9 o'clock my time, Pacific time, from that point until the last hour and a half or 2 hours of the close, I assume anything that could happen is rookie roast stuff. So for this to continue to be a trend day, it's got to be strong going into the close for me. And I don't know that it's going to be. It's already back to SD1 here. And then the close is a completely different segment. We in fact, we have a class today on that. So that's the way I've done that. I know some people do it, in market profile segments of a half an hour. That can be tricky. It's a lot of segments. And I'm not sure it changes that much, in each rotation, particularly during the rookie roast, at the middle of the day. So anyway, that's kind of my answer to that. I'm sure other people have other answers and other opinions about that. Lee probably does. I don't know. I see, Lee, you're here. I don't know if you want to jump in. You're certainly welcome to if you have an opinion about that one. Your style's a little different, so feel free to. JVC, feel free to contribute if you'd like to that one. Let me read on while you guys are thinking about it, whether you want to do that or not. Good thoughts on zooming out and explaining the mechanism. Thank you. Appreciate it, CK. So, let's see what time. Well, we've got about 3 minutes left. This is exactly what I hoped would happen for this. I wanted to make this session kind of like something you could listen to, on the radio in your car, or while you're working out, not necessarily have to look at a chart, or you could look at it when you get back, and just something to think about each week. So that's what we're going to try to do every Friday, and it'll be at the same time. And we've got this on the calendar all month, and we figured we'd give it a go and see what you guys thought. And if you liked it, great, we'll keep doing it. And like I said, if we open up a stream with some suggestions, I'll post some of the topics I have. You guys can suggest some things. I
have a topic created, by the way. I just put the link in the pit. If you, for your reference, Jeff, if you star that first post, you'll have it in your starred messages.
Perfect. Let me go do that right now. Appreciate it. Got it. I see it. Okay.
See you, CK. Thanks for dropping by.
Yeah, and so, one more comment about this. The best topics are generally ones that have some sort of emotional or thinking component, like Bar's question about intraday or, accepting a loss, things like that. So, like I said, I have a bunch I'll suggest, and we can kind of decide what to do each time, and we'll see how it goes. So thanks, everybody. I hope this was helpful for you. And I will see you if you're coming to my closing session. We will probably start a little early, but worst case by 3 p.m. Eastern, 12 p.m. my time. And I might open up 15, 20 minutes early, particularly if we have all this volatility we're having now, because this has just been, again, it just happened again. Am I still sharing?
Yeah. Yes, you are.
So we just got it again. This has been going on all day. So here's the ledge right here. Okay, we broke it, and then just wait till it runs out of gas or makes a lower low. Hop in, boom, right. Or you can just fade it on the pushes up if you're a little more aggressive. This is perfect conditions for swarming. It's a weak trend. It's not a strong trend, and that's what you want to swarm. Either go with the ledge breaks, swarm them, or swarm them afterward and fade them back into the range. Both are valid today. The only thing you want to be careful of if you're doing that is if the trend reasserts itself really aggressively, you don't want to be doing that. And right now, there's not a lot of evidence that's happening. I haven't looked at a footprint recently, though. Let's see. Oh, we have UB up there, but we have a price rejector on the last rotation and one on the bottom. Perfect volatility, Go with the ledge breaks, fade them once they break back into the range. Beautiful stuff. But again, this is a perfect conclusion to this session. That could change. One of the ledge breaks we could break and we could get a short squeeze going and not look back. So just be prepared to be wrong. It's that simple. All right. Thanks, guys. I appreciate your attendance, and I'll see you. Thanks, Dino. Yes, it's going to be like Dino from Fred Flintstone and dinosaurs. So it'll be Dino the Dino. That's the commentary from the tar pits. There you go, JVC. That ought to give you lots of cartoon material.
I got no shortage.
Old dinosaurs stuck in the tar pits in La Brea. All right, everyone. Thank you for coming. We'll see you a little bit later.